Is this the most broken indicator for NASDAQ trading? Yes or no? Welcome back to my YouTube channel, guys. My name is Andre, and today we're going to talk about an amazing indicator, which is actually not an indicator. It is actually just a tool that you can find under the indicators button here on TradingView that helps you to see the London highs and London lows. So let's go and show you how it works. All you have to do is go to the indicators button and search for Lux Algo ICT Kill Zones Toolkit, and you will find it over there. I'll quickly just press the settings button so that you guys can copy my settings. So please pause the video over here and copy my settings so that you can have it exactly like how I have it. Okay guys, back to the video. So how it works is that we are going to spot the London high and the London low in the morning session with this tool. Okay, it makes it easier for you to see it so that you don't have to actually go out and draw it yourself. So let's go into the rules of this before we look at some example trades. So if there's a liquidity sweep, we are actually going to look for the opposite direction trade. This is obviously with the trend. So what I mean with the trend is when NASDAQ is in a bearish trend, doing this type of movement, making lower lows, we are going to look for sells. When it does the opposite movement like this, making higher highs, we are going to look for buys. It's just very important that when you trade a certain direction, you need to know if it's bearish or bullish, because if you take buys in a bearish state, you will most probably only make a small amount of pips or lose more trades, and opposite is also the same. So if it's in a bullish movement, you want to take more buys and less sells. You just want to do the highest probability trades that you possibly can. Okay, so here we have a few bearish examples, and I will show you guys a bullish example as well down the line. Okay, so when I say no liquidity sweep, we're going to do a no liquidity sweep example over here. And please remember to go to www.tradersreview.co.za to view our free courses and all our reviews on prop firms and brokerage. Okay, so let's go to a no liquidity sweep. So what I mean with liquidity sweep is when it actually sweeps liquidity to a certain side, forms some sort of a breakout, a fake out, to this one side, where retail traders would have put buys. For example, if it went like this, retail traders would have tried to bought it, and then the market would have gone down. And this is where smart money would actually sell then. But we'll get to those examples now. Okay, so we are in a London session here, and when New York Open actually hits, we can see, as per my other videos, as per how I've explained NASDAQ so many times, we have a lower low here, or a low that was broken, not a lower low, just a low that was broken around here before New York Open, or in and around New York Open. I always say in and around New York Open because you can't always exactly define it. It broke the low here, and it went up to retest this order block over here for your sell. Okay, so this is a simple plain one. There was no liquidity sweep. This was an easy, normal upwards movement into an order block for a sell. So if there's no liquidity sweep, we're going to continue finding an order block normally and selling from that order block with a very nice stop loss above that high. Okay. But now with liquidity sweeps, we're going to quickly look at an example of that. So now, before New York Open happened, right? I'm just going to draw this line out a little bit longer so that you guys can see. Before New York Open happened, so here in South Africa, New York Open is 4:30, but this happened an hour or two beforehand. It actually went up, swept that London liquidity to the top side, and that's when you should know it's indicating that it's going to drop further. So we've got the liquidity sweep. We've also have this order block here at the top. That is another indication. So it is nice to also have that indication of an order block with your sweep, but the sweep is always a difficult thing to enter from. Okay, you usually would like to enter once that candle goes below the London session again. So you will see, for example, here when it goes below the London session, that's when you usually want to enter the trade after the sweep was completed. Okay, so let's have another look here at this one. In terms of this one, we are looking at the rule now where I said you only want to sell in bearish trends and you only want to buy in bullish trends. You would see that we had a liquidity sweep to the downside before New York Open, around 30 minutes to an hour before New York Open, indicating that we will be going for a buy. And that happened. It actually went up into a buy, but it wasn't a very big buy. You wouldn't have caught a lot of pips. So that makes it perfect to catch that small buy. But because we are on a bearish trend overall on the 4-hour, 1-hour, and even on the 15-minute, we don't want to hold this trade for super long. And even personally myself, I would not have even taken this trade because of the fact that we are still in the bearish trend. We need all the confirmations to take a trade. You don't just want to take a trade because there's one thing saying to take the trade. But I want to show you that you can get the sweeps to the downside and then move further up. But this move actually indicated our next day's New York session trade. So you can see on this side, we have London being broken to the upside, liquidity sweeping to the upside an hour or 2 or 3 before New York Open, and then it went down where you could place yourselves in and around New York session. But also we've got the confirmation from this order block to the left, liquidity sweep of this London session, order block to the left, and then a actual nice sell to the downside. If you take your fib like this, there your TPs would have all been hit as well. So you have the 91 on the fib, you have the order block, you have the liquidity sweep, you have the trend direction with your bearish trend. This is a perfect trade to take, and it ticks all the boxes as per what we want. So it's going to be liquidity sweep, order block, the trend, and the Fibonacci. Those are 4 of the major things that you need to look at when taking a trade. Okay, we're going to quickly go to a bullish example for you guys. So this was before NASDAQ fell for a while. We were still bullish and going on the upside. So this is exactly the same, but the opposite direction. So we have the London low there. We have the London high there. And we can see the sweep that happened before New York opened to the downside. And once it reaches back into this London moving session, you can then start looking at buys to the upside. So we even have a nice order block here that was retested there for a nice confirmation. So you can take a trade depending on your risk management and how much risk you actually like. You can take the trade when it's inside London. You can actually look for an order block like here where it hits, and then you can enter as well. So there's a bunch of ways to actually get those entries, and it's all up to you. Let's look at the fib. There you can see it went to this 50, around the 50 area, still a valid entry point, and then it went upwards to those TPs. So you guys can see now that the bullish one also works, but obviously you have the liquidity sweep to the downside, giving kind of like a fake out to the downside, trapping sellers and going into buys. So guys, I really hope this helps. I want you guys to go check it out. So go check the ICD Kill Zones toolkit from Lux Algo and put it on your charts and look at New York Open every day. Okay, look at it, look how it works around the London session. There's obviously going to be trades that is not that you can't take because it doesn't fulfill all the requirements. So there's going to be days that you sit out a trade, and that's good, that's fine. Any trade that you don't take is a trade that you at least don't lose. So don't be afraid, or don't be willing to take every trade that there is. If it doesn't meet those requirements, don't take the trade. And that's what makes traders successful, is knowing when to sit out. So guys, I hope I see you in the next video. Leave a comment down in the comment section if you have any questions or if you have any comments, and I'll see you guys in the next video.